Stocks flip-flop a day after the presidential debate. What's it all mean? Let's ask Melissa Otto of S&P Global Visible Alpha, and I'm Lisa Bernhard with Reuters. Melissa, stocks started off down today. Now we're seeing the S&P and the NASDAQ up. What do you make of the market movement today?
Clearly, a lot of volatility we've been seeing the past couple of weeks, continuing today. The market is essentially reacting to the macro environment. There's quite a bit of uncertainty around what the backdrop is really going to look like. I think the CPI data was essentially in line with expectations. S&P Global Market Intelligence is expecting a September rate cut of about 25 basis points. However, over the past few weeks, there has been rhetoric in the market about a 50 basis point cut. Given today's CPI data, my read on that is that it's skewing toward that 25 basis point cut. And so that's creating a little bit of tension in the market.
And yet, wouldn't it also send a signal to investors that things are falling off a cliff faster than maybe the Fed wants it to if they did cut by 50 basis points? What do you think?
It's a tricky one. Ultimately, I think what investors will be focused on is the fundamentals of the companies that they're investing in and whether or not those companies are exceeding expectations over the long term. That is the critical question. What the direction of rate hikes are, the magnitude of it is a backdrop that is the reality on the ground. However, the strong companies that are outperforming in that environment and able to navigate those types of macro issues are the ones that essentially will likely outperform.
Let me pick your brain when it comes to AI, because obviously that was a huge trade underpinning the market and it's tapered off a little bit. How do you balance the sort of risk reward in the AI trade when there's so much money, CapEx, being poured into AI by these companies?
Yeah, I mean, it's no joke. The amount of CapEx that has increased in the past 12 months is staggering. I mean, if we just run the growth rates, CapEx has accelerated at a faster pace than revenue growth and is expected to continue. So the big question right now is the million-dollar question is, at what point does the tech industry start to see the rewards of investing in so much CapEx? When does the rubber hit the road and revenue growth start to outpace CapEx growth? And for that to trickle down into real earnings acceleration.
Nvidia CEO Jensen Huang spoke at a Goldman Sachs conference this morning. You listened in. What was the key takeaway from that?
What was probably the most compelling takeaway was his commentary around Blackwell, their next generation product suite. And this was really interesting. I mean, he came out and said, look, demand is so great. It's really creating a lot of fervor with our customer base. And we're really doing our best to try to align with our manufacturers, with our customers in order to deliver on that. And that's ultimately what keeps us up at night. And I think if I look at Visible Alpha consensus data coming into Q4, Nvidia is expected to deliver $2.5 billion in revenues. But looking ahead to next year, that number is expected to jump significantly to about 55 billion. So it'll be really interesting to see what the company guides to in Q4 and what sort of commentary they give about that outlook, because that's going to tell us a lot about the future trajectory of AI.